There we go. Welcome, everybody. This is the Thursday evening Viper Trading webinar, training webinar. If you're here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. First, we've got to knock out our standard disclaimer. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, let's get over to some charts. The title of this was looking for trades in the Asian session because I want to use some live data, but there was a lot of, I'm going to approach this from two different angles tonight. One of them is we had a lot of questions in the live room this morning about in fact, I'm going to go ahead and do this. This is a object trader panel on the right here. I'm going to go ahead and bring up a region box. There it is. And I'm going to explain what this is. Okay, on this tool, we have several different object types. I'm going to cover region and bar close tonight. I'm not going to get into all these other ones. I talked with Gary today. He's going to do several short videos, little couple 3, 4, or 5 minute videos that are real quick that explain all the features here that you can sort of toggle through. I'm going to get those up on the web here in the next few days. Some of the main ones we use are the region, which is this box. So there was a question in the room this morning about the term region or box or region box and what exactly are we talking about. And so let me just get into the meat of it right now. All right. Originally, when we built Object Trader, truth be told, it was designed originally, the region conceptually, just to go back a few years and explain this, is that we wanted a way to sort of engulf a whole, say a whole area like this. This was the original concept. And we wanted it to be able to automatically buy down here and short up here and buy up here and short down here when you were in a range. And then we realized that as our program was building it and we were working on it, that there was better ways to build a region box. And many times those regions are actually quite a bit smaller. In the context of this tool, Object Trader, the term region and box and region box are interchangeable. Okay, they're all representing the same thing. And essentially it's this. We want to usually look for, let me show you some, I have a box right here, and long and short's enabled. So theoretically, if this closes down, we will get short. By the way, just a heads up before I do anything, I just have to tell you, there, we're short. This is a sim account. These are all sim trades. This is not real. I'm not recommending that you take these trades. I'm simply trying to illustrate and show you the tool and how it works. Okay, so this is not real live trading. Sim. And I'm not recommending you take these trades. I'm just showing you how the tool works. So here, for instance, let's just look at what happened here. So what happens is you take with the region selected here, and long and short enabled and reverse enabled, what physically happened, if you're wondering what's going on, is that when this bar closed outside of the box, here's the box right here. Everybody can see the box, right? When this bar closed outside of it, since short was enabled, it took a short. And so we are actually short right now. And we had one contract on. I'm going to drag this out of the way, otherwise we're going to fill it probably. And with one contract originally, this was set to 10 ticks. So the 10 tick target was sitting right here. So we have, we can put on as many up to 4 contracts on here. You can put multiples on here. And whatever the first target is here, second target, etc. Now, if I had a 2 in this box, and it closed below like this, we would be short 2 contracts. And in the illustration here, I'm showing you one target would be 19 and the second target would be 30. And so Object Trader, in that sense, is what we would call a semi-automated strategy script. Semi only from the fact that you have to physically put the region box in yourself, and that once the trade is taken, as it did right here, Object Trader does much of the rest for you. It puts in the target, it puts in the stop. You can clearly, and you can move those around manually on the chart. You can drag them up, you can drag them down, you can put them anywhere you want. And this is somewhat unique because if you're not familiar with NinjaTrader, the way most strategies work is that you have to put up the strategy on the chart, and then if you want to manipulate your targets and stops, you need a separate chart with Chart Trader on it. So that's one of the advantages of Object Trader. It's all here. Everything, it's all self-contained. Did it take another? How many do we have? How many contracts do we have on? No, we just have one. All right. Okay, so any questions on how that works? Any questions on how that works? So that is a region box. That's how it takes a trade. We are currently short one contract on 6J, and we're sort of hovering around, our entry point here. By the way, pop quiz to make sure everybody's awake here. I know, by the way, I see quite a few people still coming in. Don't worry, we're still kind of getting started. You haven't missed anything. And if you need to leave early, we are recording this, and it'll be up on the web for everybody to review tomorrow. So what I was just showing here, for those, quite a few people are just coming in here, we're just simply illustrating how to put a region box on a chart and then how to let it take trades. This is kind of the simplest thing, that, illustration of how it works. We'll do other things. What I am showing here is strictly for illustrative purposes in Sim, and it's not an actual trade we would take. Or is it? Let's ask the question here and find out. Make sure everybody's had their coffee and is still awake. Is this a trade that we should have actually taken? Just pop in a yes or a no. Do you think this is a good trade? The way the box is drawn right now. You don't have to explain why you think it's good or bad, but would it be good or bad, yes or no? I mean, we are short. We're only down a tick or two. You don't have to explain why you might think it's good or bad. Is it good? Good would be yes. And if you're voting bad, no. Was this a good region box to put on here is the question. Yes or no? Oh, we're getting a lot of no's coming in. Any yeses? Let's see if we got any yeses at all. One from Havad. Okay. Havad, I think you're just visiting. By the way, welcome everybody. We got quite a few people on a free trial and visiting us this week. We are conducting an open house through tomorrow and Saturday morning's webinar. So it'd be this week and all of next week. We're going to invite everybody in to visit with us. Yeah, so the answer is no. This is not a good region box for a number of reasons. And here is why. Here's a good way to think of it. It's like any tool. Think about any tool that you have. Everybody here has used a hammer or nail or saw or something, right? And each crescent wrench, different types of tools, if you think about the concept of tools. And so in order to use a tool properly, you have to know when to use it and how to use it and what tool to use, yes? Now we can see here that for the past, couple hours, 6J as a market, and this is the Japanese yen futures, and we're just opening up the Asian session. It just started like 15 minutes ago. We're pretty much in a range. You've got resistance up there, and you've got support down here. So when we think about ranges, how do we trade ranges? Well, normally we frame it in the context of the overall market direction. In this case, let's go back a little bit here and see what's gone on with this market for the past day, through today, yesterday perhaps. You had a nice big huge uptrending move over here. Then it flipped and started to sell off, and you got a red background and you were trading the short side of it. And then pretty much since, I'd say right in here, she's been in this nice, pretty well-defined range. So when we're trading ranges, and this is where I'm going with this, is that in order to use the tool, we need the proper context to use the tool, right? You're building a house, you're putting up a wall with wood, and you have nails, you use you use a hammer. If you're going to cut something, you use a saw. And so in this case, if we're going to be selling the top of this range, and we're going to be buying back the bottom down here if we're short, and perhaps getting long down here. So now when you in that context, when we know we're buying support and selling resistance, we can clearly see this region box wasn't the prudent thing to do. It was definitely not the right thing to do for the following reasons. First of all, I think Charles S. typed in the fact that the box is much too large. That's correct. The box is way too big. Generally, we want to see boxes under 8, 9, 10 ticks. So let me show you examples of some pretty good boxes. Here would be an excellent box right here. We want to usually see them somewhere located at or around the mid-band, and generally they should only be usually under 10 ticks. A really good box is anywhere from 5 to 8 ticks. That's a good tight box. This is a good example of a good tight box. In this case here, we can see that when the bar closed outside of the box, what did it hit? Right here. Yeah, it hit support. It hit support. So we were shorting right into support. Obviously, we don't want to do that because there's no meat on the bone to make any money on this trade, right? There's just no meat here. I mean, by the time the bar closes and it wicks down here, you're lucky to get 3, 4 ticks, and of course you see what's happening. It's bouncing right back in our face. So this is a clear illustration of how not to use a region box. Everybody see that? How not to use a region box. Yeah, exactly. You want to fade the tops and the bottoms. So usually what would happen in this case here is you'd be putting sell orders up here, you'd be putting buy orders down here, and I see several people saying you fade the edges. Now what fade the edges mean is this. When you're trading a range, now this takes a little bit of practice, and each instrument is a little bit different. Some are tougher than others. If the top and bottom is not well defined and it's not clean, I'll show you that on some other charts, then it's tough to buy and sell because you can't really sort of define where you want to get in. What fading means is that you see this 91 level right here? If you're going to sell up here, take profits from your long trades and or short it, you have to come inside of the highest level and actually put your order right here. The buy or sell order would be sitting in here. In other words, you're not putting it all the way up here, right, when you're trading in a range. Likewise, down here to buy support, the buy order would be sitting somewhere down in here. Usually it's anywhere 3, 4, 5 ticks off the bottom. So here's the bottom, here's the bottom, here's the bottom. Your buy order has to be somewhere up in here. Everybody see that? So in actuality, when we were shorting out of this box, what probably should we have been doing? Right in here. That's a question for the team. When we shorted outside the box, and we all know that that's not a trade we would really do. I'm just showing you that the box works to get short. But what probably should we have done down here instead? Yeah, we should have been buying probably down here. Or the thing would have been to do is, a few minutes ago when it hit the top, we should have done what? Yeah, shorted it way up there. You should have been short from up here if you were going to short it. Up here, right? And you'd actually be covering down here. Right, exactly. So that's how we trade inside of a range. You don't short into support. Everybody see that? So that's just a quick sort of illustration of, and I wanted to use live data. Let's get another chart up here. I want to do a couple more of these. Does everybody see this? Any questions on this? You know what? For the heck of it, if you want, I can just leave this trade on. We can watch it and tuck it in the corner. In fact, let's do that. You know what? For the heck of it, let's just do that. Let's just leave this trade on for now. Let's drag the target out of the way. We know we shouldn't have taken it, but you know what? Let's just leave it on. Okay? And we'll tuck it over in the corner. and we'll pull up another chart. By the way, is anybody looking at charts right now? Does anybody see anything moving in the Asian session here? Is anything moving right now? Is oil? Any take a look at gold? Anybody can take a look at gold, oil. Sometimes 6A is moving. Let me get a 6A chart up here. Let's tee up 6A. 6E, is 6E moving, David? Tell you what, before I pull up 6E, let's look at the Aussie dollar futures right here. Nazi's moving. I see Nazi getting a couple of bars of movement. You know, this is actually technically the beginning of the Asian session. So, you know, markets are just kind of getting wrapped up. Basically between here, midnight Pacific is when you get a lot of movement in the Asian session. And then, of course, the European session kicks in around midnight Pacific till early in the morning here, California time. You know what? That's a good question. I've been meaning to check that. I checked it over the past few days. Let me just flip over. This was a question. It's a good question from Byron. Well, hey, welcome, Byron. I see people still coming in. We are recording this, and it'll be up on the web tomorrow. So don't worry if you came in late. You'll be able to catch the whole thing. Let me show you something real quick you want to do on your bookmarks. If you're going to, trade the futures, pretty important site to have bookmarked here. It's called CME Group. Most of the clearing of futures contracts are done through this business right here, CMEgroup.com. You want to load that into your browser and you want to bookmark that. So you scroll about halfway down, and these are pretty much, well, it's not all, but a big chunk of the futures contracts. Here's your crude oil. Now, when you mouse over these, it's going to give you the current front month. So for those of you that are completely new, here's how futures markets work. They are somewhat similar to options, if anybody's traded options, in the fact that they roll at different times. The equities, for instance, see the equities here, E-mini S&P, NASDAQ, mini Dow, etc. Here's the Russell, E-mini Russell. You can see when you mouse over them that they're all December contracts. They just rolled from, so the sequence is December, March, June, and September. So we just rolled like a few days ago. I think it was either Monday or Friday from the September contract to the December contract. So we're trading the December contract. And there was a question here on the Forex or FX. Yeah, we're still in the September contract here. This is the Aussie dollar, Canadian, Swissy, Euro, and the yen, of course. The yen's right here, 6J. So I think they're about to roll soon. I think very soon. Here's how you check. You go into a contract, you simply click on it. You go to calendar. And here we can see that the September contract at the last trade is going to be September, last delivery is September 20th, and last trade is September 18th. And what is today? What's today, 13th, 14th? It's going to roll, I would say, probably tomorrow. Yeah, because normally this last trade and the last delivery, you have to fade this by at least a week. So I would bet money that we're going to be rolling those tomorrow to December contract. Yeah, so they'll be in sync with the equities. Usually the currencies and the equities are pretty much in sync within a few days of each other. Let's get back over here to 6A. This market is starting to move here. Let's get some of this stuff out of the way. Now that we're in it, we got to manage it. What do you think we ought to do here? Here's the stop. Here's the stop right here. Anybody want to move the stop down? It's way up here, 12 ticks out of play. Anybody? Move the stop down? Stop. How about the target? What do we do with the target? Drag it out of the way? Let it drop? Any ideas? Lock in the profits. Take the profit right now, TP. Cast your vote. Cast your vote. How you want to manage this trade? Let's go back a little further. Let's look at some more data while you're pondering what to do with this. Let's go back a little further. Let's try to find ourselves a support area. Gary's really good at doing this in the room. Of course, you see this every morning in the live room. He's the Lion King. There's actually a little bit of a swing right here. We'll see if it breaks that. But, you could get all the way down to, I see a little consolidation patch here. So, I mean, it could get all the way down into here, right? And then below there, I'd say probably, down into here. Take the stop to break even. Take the stop, put your tight stop right above stealth. Take the target away, says Charles S. All right, let's get a cast of votes here. You want to take the target completely out of play here? Anybody? I mean, way down here and just manage it with stops? The entry was here. Tell you what we're going to do. Let's go 2 ticks behind our entry right here like that. Now let me blow this up. If this was a legitimate trade that we would take, say we were short actually out of a better box more like this. The way we tend to do this is that you hear this a lot in the room, and it may be a little confusing if you're visiting and you're not familiar with the terminology. You hear a lot of times peel your tell you what we're going to do. Let's go ahead and pull this target back up a little bit. Take your scalpy. Does anybody know what we're talking about? Take your scalpy here. What does that mean? Take your scalpy. What the heck are we talking about? Take your scalpy. Is that some kind of like foreign language or something? Anybody? What does that mean? Let's say hypothetically we were short out of this box right here. And the market's coming down to support, and we say take your scalpy. What does that mean? What does that terminology mean? Take your scalp. It's short-term profits. So what we try to do is this. Let me back up. And here again, this is for all the new folks who are just kind of picking this up. Is the way this works is we generally want to put 2 contracts on when we trade. We want to have 2 contracts on. And usually we try to peel off some profits on number 1 contract at 5 or 6 ticks. Let me just show you over here. So that would look something like this. You would have a 5 here in target 1, and target 2 could be 20, 30, 40 or more. So you lock down short-term profits, and then you have a runner. Generally speaking, we pretty much always want to trade at least 2 contracts if we can. So when we say take off the scalpy, that's what we're referring to, is that the short-term contract or target has been hit. You go ahead and peel off your first contract, and then generally we want to take that stop, the initial stop up here, and pull it down tight to where we got in. Now, if you put it right at break even, then you have what's called a free trade, because you've already made your 5, 6 ticks, and then if you stop out at break even, you still made money. Now, in reality, what might happen with this trade is that for now, it looks like the support level is actually holding, and it's bouncing, and it could come up and check this area right here. So I'll tell you what I'm going to do. I'm going to put the stop just above the wick of this candle right there, in case she wants to come back up and check it. All right? Okay, so that's 6J. Let's take a look at 6A real quick. I want to get some feedback from the team here. What should we do with 6A right now? Is this a buy, sell, or wait? What say you, team? So you would type in, cast your vote. B for buy it right now, right here. Buy it. Sell it right here, S. Or wait and do nothing. W. I'll give you 10 seconds. 10 seconds to type in cast your vote. B for buy, S for sell, W for wait. You don't have to type in Y. What we're trying to do is we're trying to look at some real data moving here in the Asian session. We're looking at these markets. This is real. This is really what 6A is doing right now. It's not moving a lot, but we're trying to learn the concepts of how we're going to trade the markets, right? Four seconds left. Cast your vote. Buy, sell, or wait. Interesting. We got, I would say the predominant vote is by far wait. Wait for lower highs, lower lows. Wait, wait, wait. A couple of buys have snuck in. So in most markets, we have this notion of what's called thrust and retracement. It's sort of a very basic level thing. Thrust and retracement. So when we think about getting into trades, let me ask this question, and I know I'm asking a lot of questions, but I'm trying to cause, especially all the new folks that are visiting, some reason for thought. Let's say, for instance, that in this market you had a thrust like this. Let's call that T for thrust. And then you have what's called the retracement or pullback. There's different names for it, but essentially it's a retracement from a thrusting move. So I'll just put an R here for a designation of retracement. Now, if we were to enter trades in this market, the 6A, in what I've shown here, would we enter on the thrust move or would we enter on the retracement part of the move? T for thrust move, get in, or R retracement part of the move? How are we getting in to the trade? T for thrust, R for retracement. I'll give you 5 seconds. You have no time to think about this. You should bam hit that nut. There should be almost no thought in your brain about this. It should be bam, just like that. 4 seconds left. Cast your vote. Type in a letter. T or R. It's that simple. Thrust or retracement. How do you enter trades? Time's up. It's always R. It's always retracements. We only take retracement trades. This is a big no-no. Now here's I know what happens with a lot of traders, and this might be some of you. What's happening is a market starts selling off like this one did, right? Selling off, selling off, selling off, selling off, selling off, selling off. And then when it gets all the way down here, you're convinced that this thing is tanking. And so when it gets down there, you go ahead and you put a sell order in right down here, and you get short. Only to find out that it starts to go pull back against you. Pulls back against you, pulls back against you, and wouldn't you know it, your stop is sitting right up here, and what does it do? Takes your stop out, and you can book a big loss. Now, why is that? Well, because the thrust part of the move is where the folks who are short this market were already short from way up here or other higher levels. They're already shorting from here. They are taking profits and covering down here. And so when you cover your shorts, you have to buy them back. And when you buy them back, that creates an updraft, which creates the retracement. So a good way to think of it is we are retracement traders. And in a large chunk, I can't give you an exact percentage, but many trades that we take are located right around the mid-band. So notice what happens here in most of these markets. They tend to come back right up into this area right here. You ever noticed? If you watch these charts, have you ever noticed that this mid-band area, it always seems to be a little bit of a magnet? Looks like our 6A is breaking down. 6J. Anybody want to move the stop? Here's our target. Move the target, move the stop. Yes or no? Cast your vote. It's dropping now. Got the stop right at break even. Anybody want to take it any lower? Add on a retrace? We're not going to be adding here, Byron. We're not going to be adding here. We're going to manage the trade we have. Might come down and get this target. Anybody want to vote to move it out of the way? See if we've got a runner here? How about down here? Yes? How about taking the stop down a little bit more? What about taking the stop down to, say, here? Or is that too tight? You want to go up here? Now we have a free trade. That's too tight? Tell you what, we'll leave it here until if we get down into this area here near the support level, we'll crank it down tighter. Move the stop. Okay, good. So now in this example, we do have a free trade. I know we weren't supposed to take this. We got in the thing, but now we're in it, and we're trying to manage it. When we say free trade, is that this trade will make money no matter what happens, simply because it's either going to do, the way it's currently configured is it's going to come down and hit this target down here, or it's going to come up and retrace and hit this stop. In which case we'd make a couple of 3 ticks either way. Here you'd probably make about 20 ticks, 30 ticks down here. Tuck that back in the corner, keep an eye on it. So yes, we are retracement traders. We are retracement traders. We are looking for markets that are trending to take pullbacks into normally somewhere around the mid-band to get in. And then we deploy our tools accordingly. We can use the region or the ray or the bar close and what have you to get in. So now that we know that, when we look at 6A in its current condition, we can say what? Well, it looks to me like what we had here was a thrust. This would be your thrust. And now it's in the process of pulling back. So the question then becomes, and this is the challenging part about trading, particularly retracements, is how far back is it going to pull back to? Is it going to pull back to here? Should we put a region box on it right now? Let's see here. Let's do that. Let's go ahead and put an insert. And we're going to, should we leave on long only, short only, or both in this current condition? Turn off the shorts, turn off retracements. Long only, short only, or both? What's the trend? Do we want to get long in here? Or are we trying to short this? What say you, team? Long only. Good. Yes. So here's how you know, here for the most part, if you're in a trend, here's how you can tell or get a sense of what the proper direction you should take is let's just continue with our explanation of a little bit of the mechanics of how this sort of works. This would be the thrust part of the move, and the thrust part was up, right? It pushed up. And so when we talk about this notion of retracing, the retracement will be a pullback, right? And so that's the R part, right? Here's the retracement part. And so in the case of an uptrend, when we get retracements and it's stair-stepping up like this, we are looking to buy. So this would be buy long only. We're looking to buy retracements, pullbacks into support. In the case of a downtrend, when a market is heading down, like it was over here, in other words, the primary thrust direction was down. Red bars, red stealth, mid-band, all the bands stair-stepping down. When we get a retracement, we're looking to sell or get short up here, right? We're looking to short rollovers in a downtrend and buy support in an uptrend. Does everybody see that? David H. On the 6A chart, right around 8:01 Pacific, would you have put a region box there, and as the background was red, would you have just opened up the short on the short side? Let's see here, 8:01. Where is 8:01? Okay, let's go back and recreate that. I'm just going to leave this box on here just to see if we get a long trade on a close up. It's not moving much. We might not get any trades. By the way, for you, those of you that came in late, just a heads up, this is all total sim here. This is not real money. Okay, we're just playing around here to show how the tools work. And I'm not recommending it here that anybody that you take these trades. I'm not suggesting anybody take these trades right now. This is purely educational. Okay? Looks like we're getting a little more movement on our 6A. How about tightening that stop? Cast the vote, yes or no. Tighten the stop on 6J. You want to drop the stop a little tighter? Here it sits right here. Here's your entry, this yellow line. How many of you want to drop the 6J stops tighter? Okay, getting a lot of yeses coming in. How about right... Let's get this box out of the way here. Let's get this out of the way. Put that back up here. Get this out of the way. For those of you that just came in, you might be a little confused. What the heck is he doing over there? We had a region box we drew for illustrative purposes. We got short on the close of this bar right here. The yellow line indicates where we got filled, in sim, of course. Market came back up, checked the initial stop was up here. We got fortunate. In this case, it broke the bottom of it, and now we have a runner in play. We said this probably wasn't a necessarily good trade to take, but now you're in it and you have to manage it. Sometimes that's going to happen, okay? Just a heads up. Everybody knows that. If you've traded any length of time, you know that. Sometimes you get into a trade, maybe you shouldn't have got into the trade. It doesn't matter. Once you're in it, you have to manage it. All right, now we have to tighten the stops a little bit more. We got a runner underway here. And the way we're going to manage this is as long as she comes down. Now we know I'm going to take 2 quick votes from the team, and whatever you vote, that's what we're going to do. In regards to this target right here, we see that there was a support resistance area that was more or less right in here. I have the target in the middle of it. How many of you want to take the target up to here? Just cast a vote, yes or no. Just above this swing right here. So we're fading that support level on the short. How many of you want to move the target up to here? The original position is right down here. Yes or no, move it up. In other words, do you want it to get filled ahead of the support level? Yes or no? Just type in a Y or an N, 5 seconds. Well, I'm going to give you 5 seconds on these votes. You got to make quick decisions when you're trading, right? We can't sit around and think about it. What am I going to do? Oh, geez, so many decisions. You have to, as time goes on, you will fine-tune your skill set so you quickly see and make decisions on what to do. It should only be seconds. You should know what to do. Overwhelmingly, yes. Good. Good. That's exactly what I would do too. Because there is a strong likelihood that the market would come and check this area right here and bounce. So, for instance, when we're in the room and Gary puts lines on the chart, he's just not willy-nilly doing that to have something to look at. That everybody knows that we put those lines on there because those are support and resistance areas, and it drives a lot of decision-making as far as targets, stops a lot of times, right? You know, where we're getting in, where we're getting out. So those support and resistance levels are extremely important. And tell you what I'm going to do on Saturday morning. I'm going to spend some time, devote some time on looking for where you put support and resistance lines. I'm going to put that in Saturday morning. Okay. So good. Yes, we absolutely want to move the target up. Now, we should move the stop down. Stop sitting right here. Here is our entry, right? Where do we want to put the stop? Let me give you some options. And this will help you also in the room. Let me talk a little bit about what you hear in the room too. Sometimes you'll hear, well, put your tight stops here, put your loose stops there. Notice what's happening here. I'm going to show you some areas so that this is I'm going to sort of demystify what loose and tight is. This all might be moot because if it comes down here anymore, it's going to probably get that target. I'm going to give it some room so at least I have a trade to talk about. It's going to come get it. Anybody want to move the target and let it keep dropping? Quick, quick, quick. You got 3 more ticks. You think it's going to go lower? No? Leave it. Yes or no? Quick, quick, quick. 2 seconds. Pull it back in here or leave it where it is? Leave it where it is? No, no, no. Leave it where it is. All right. Okay. All right, everybody. I'll leave it right here above the support. Don't panic. Everybody's panicking like exclamation points. It's just a sim trade. It's all good. All right. So real quick. Okay. So now that we're moving down precipitously in our favor, we want to get this stop down tight. Okay. Can you see the candle in the wick of this last bar where it tried to retrace? All right. So when we say tight, can you see these lines and these following it down? Can you see these? You got a line here. You got a line here. All these lines. Okay, these lines can represent trailing stops for you, different levels of trailing stops. We have the stealth line. We have the band lines, 1, 2, 3, 4, 5, all the way up to 8. And we have the mid band, which is sitting up here. So generally speaking, when you hear tight stops, the stop will be located somewhere in here, tight, close to the current price action. In other words, if and when the short covering happens for anybody who's short market participants who are short this market and starts to push it back up, it would take our stop out. Now, generally speaking, and this would be early in the morning, particularly if you have a lot of news like unemployment numbers or oil inventory and you're getting huge swings up, 80 ticks up, 100 ticks down, markets are all over the place, big, huge moves. Then we tend to go for looser stops. And there's 2 schools of thought. If you aren't comfortable with handling 10, 15, 20 tick retracements, you don't want to give all that money back, then what you have to do is go with the tight stops. In that case, you're getting in and you're getting out. You're getting in, you're getting out, you're getting in, you're getting out. And when the retracements occur, you've got to get back in. So there's more brokerage fees, there's more costs involved, there's more management time, and bam, done. There you go. So it's a personal choice, and you have to experiment with that. I suggest taking your instruments of choice and doing it in sim on your trail stops, where to put your trail stops after the initial stop entry. All right, I'm going to go ahead and take this box off of here. Any questions on that trade, how we managed it? All right, it's done. It is done and done. I'm going to take off this box, and we're going to turn that off, just like that. There we go. You're done. Now, it's so slow over here on 6A that while we were doing that, we don't even have a trade because it's still inside of this box. But if you recall what we talked about over here on 6A, this is the Aussie dollar futures, is the fact that we were in somewhat of a sideways to downtrend over here, so we were taking shorts. And let me circle back. Somebody had a question about 801 that I don't think I answered. Who was that? My apologies. Let me circle back. Hold on. Give me 1 second, please. That was you, David H. My apologies. I didn't forget about you. 801, would you put a region box there? In the background was where you opened up the shorts. Okay, good. Let's come over here. Here's the crux of David's question. He is referring specifically to right in here. 801 would have been right about somewhere in here. I'm going to address this question in 2 ways. First of all, by the way, and just before I do that, just real quick to let you know, if this market, if 6A closes down like this, since long only is enabled, we will not get short. Okay, so that can alleviate some fear that you have. I know a lot of traders are like, well, what if I get sucked into a head fake and, the thing wasn't, it goes deeper and I get stuck in this bad trade. In the condition we have here with the region box sitting right here, you're not going to get short. You don't have to worry about getting short and getting stuck in a position. In fact, I would submit to you that if it goes lower, we can simply reposition this box down in here, right? So if we still want to get long and the market comes to the mid-band, we can simply reposition the box, right? We can reposition the box. And that happens a lot. Sometimes that happens. You got to move the box around. But back to David's question, and it's a good one. In order to reenact that, we have to go back and pretend we don't know what's going to happen. So let me ask this question for the team then. In the condition it was in at 8 o'clock, if it looked like this, would we be taking longs only, short only, or no trade? And the condition was in right here. And when I say no trade, I'm referring to the size of this box. Is it acceptable or unacceptable? That would be a no trade vote, or N. So your votes are, and I'll give you 5 seconds to think about this. Are you shorting only here? Long only, L, or no trade? The no trade vote would be because the box is too large. 4 seconds. N is the no trade vote, by the way. What say you, team? We're answering David H's question. We're answering it collectively as a team. What say you, team? B for buy or long, L. S for short, or NT, no trade. We got a couple of S's coming in and a lot of no trades. From a technical point of view, you could make the case that given the fact that the background was red, we were stair-stepping down. We had a series of lower highs and lower lows, and you should be looking to short this market. So if you were going to trade it and you saw a trade, the answer would be S for shorting only in this particular case. You wouldn't let this box, in my opinion, and given this condition, and you drew the box, so you wouldn't let it go either way. So the technical answer is short. Now, that being said, you have to look at the condition. Is this a good box? I would say no. It's too big. It's way too big. Boxes, as we said earlier, want to be about that big. This would be sort of pushing the upper end of acceptability in terms of box size. Okay? So the answer was yes, short if you're going to trade it, and if you weren't comfortable with the size of the box, then no, would be a no trade and you would pass. Tell you what I want to do. I don't want to spend all my time on these currencies because they're really not moving. So what I'm going to do is I'm going to go ahead and take this box off of here. And I'm going to go up and I want to circle back and spend I don't have a whole lot of time here. I got like 5-10 minutes. Let me do this for you real quick. I want to recap some trades on the equities from this morning real quick, okay? Try to get a poll of the team. What do you like to trade? Just put in what you like to trade in equities. Do you like RTY? Do you like the NASDAQ? Any Weimer traders in here? YM? I'll try to cover whatever I can here as quickly as possible. So that in the event it happens tomorrow, you'll know what you're looking at. Because I know it was some folks were a little confused this morning, I can tell. And there's nothing wrong with that. I mean, if you're looking at this stuff for the first time, it's going to be confusing. It's not going to all just jump off the thing. All right, we got a good mix here. RTY, NASDAQ, and Weimer. Let's quickly go through this. Let's recap all three real quick. We'll do this real quick. All right, here was NASI. Oop, wrong contract. Oopie doodle. Get the right contract up there. What's the matter with you? Wrong chart. All right, let's go back here. So I'm here in California, Pacific time. So let me just go through this fairly quickly so we're all on the same page. I think I'm probably missing a chunk of, I might have some corrupt data here that I'll have to reset tonight. So what happened was early on in the morning, we were short. If you recall, NASDAQ, we were short from these upper levels up here. I'm missing data, so I can't accurately represent the fact that we took the short right at the open. But most of you probably remember that. And you did get, now here is an example of a textbook region box at the midband. Right here. And NASDAQ, when she behaves herself, sometimes gives you a lot of these right here. Right here. Going back to our notion of how volatility works, we have thrust in the trend direction, which is down, and then we have retracement. And generally speaking, we like to see it somewhere right around the midband. So we said this is a midband KISS textbook rollover with a region box located right here. Now in this region box, would you be taking longs, shorts, longs or shorts? L or S, 5 seconds. In this region box at 6:34 this morning on NASDAQ, were you taking longs or shorts, L or S? 4 seconds. Three seconds. Long or short on this region box, NASDAQ 6:34. You're 4 minutes into the trading session on the equities. Good, S only. Right. Trend is down. Here's the thrust. Here's the retracement. Midband. We're shorting only. Region box. Short only. How about here? I'll help you out. Short only. Short only. Now over here, I'll give you a sort of a little bit of a recall on this. This was the swing low at 640. Do you recall that we made the observation that this didn't check the low? We said that could be a double bottom. Came over here, couldn't get back to even this swing right here. So you're getting a succession of what? What is occurring in here? Higher lows. Is that significant? Well, let's take a look. Comes up here and it takes this swing out. Pauses and then moves higher. We get a green stealth. We get a green background. Bars are predominantly blue. And we get a thrust in the what direction? Up. So let's look at what happens after that. It pulls back to the midband. And in this box, should we be getting long or short? This box right here. 5 seconds. Long or short. Tomorrow morning, you're trading NASDAQ, and you get a pattern that looks just like this tomorrow morning. At 6:53 a.m., this pattern repeats itself. Are you getting long here or short here? L or S? 4 seconds. You got to make these decisions quick. Markets just don't sit around and wait for you to think about it. You've got to instantly know what to do here. Now, you know, the thrust was up. Background is green. Bands are stepping up. Bars are blue. What are we doing? We're getting long only. No shorties here, right? No shorties. So if you think about the sequence of events on how you make trading decisions, what is one of the most important first things to do? Yeah, you got to know your trend, and you got to make the decision on whether you're getting long or short. That's pretty much, before you can use any tools at all to do anything, right? You have to know the trend direction and whether you're getting long or short, right? When the trend is down, we are taking shorts only, right? No long trades, no long trades. And we trade shorts only, and let me be more clear about this so we're all on the same page, on retracements, okay? Shorts only on retracements in a downtrend. So that's when the background is red, Bars are red, stair-stepping down. When retracements occur to resistance levels, we short them. We short it there, we short it there, we short it there. Now, when the trend is up, we are buying, right? And the bars are blue and the background is green. We are doing what? We're buying retracements. We're getting long, right? Which equals buying retracements. Right? So when we put our region box in, that's not fitting on there. When we put our region boxes close to the mid-band here, when we're sitting around this mid-band area with a nice little region box, when we're going up, we are buying support. Here is the retracement part of the move. We have the thrust, which is the push part, and we have the retracement, which is the pullback part. So we're buying pullbacks. We're getting long at support, yes? So it's really, really important when just at a very basic fundamental level. The most important thing to decide when you're trading first is what direction am I going to take the trade? Because you could have all the tools. We have all the tools. Of course, we'll give you all the tools. But you got to know what direction you're going to take, right? I'll tell you what, I'm running out of time. Here's what I'm going to do. I'm going to table the rest of this for Saturday morning. Okay? Saturday morning at 9 o'clock Pacific, I'll pick this back up. And I'll use the charts from Friday, tomorrow morning. And I'll cover this concept in great detail on how and where to get in these, how to quickly determine long and short. And so within less than an hour, everybody should be an expert. And that's what you want to do. Notice when I ask the questions, are you getting long or short? You got 4 seconds. Because you should quickly be able to discern what direction you want to take based on the conditions. Here you're short. Retracement, right? It drops. So when you see this in the red movement and you're short, this is the what part? The thrust. Right, that's the thrust. We don't take trades on the thrust, right? We have to wait for retracements. And that's what we get right here. See it? So, I mean, you know, if you're still new to trading and some of this is confusing and you're still trying to learn it, it's perfectly okay. This isn't something you master in a couple of minutes or overnight. Sometimes it takes people months or months and months to get this stuff, right? You got to practice it. You got to learn it. You got to see it over and over, pattern recognition. What the trend is, you got to determine the trend first. Am I getting long or short? Where do I want to get in? And then you deploy the tools. Okay, good. Thanks for coming, everybody. I'm going to go ahead and wrap. I hope this helped.